So they require you to become default with that credit card company, hurt your credit report, and only after that they can try and get a good settlement agreement. So what do you do?
The next hack is if you're struggling with multiple credit card payments, consider a debt consolidation loan or balance transfer credit card. This way, you can focus paying off one balance instead of juggling multiple payments with varying interest rates. Debt consolidation loans allow you to pay off multiple debts with a single loan, often at lower interest rates. I am a partner with AAA Debt Solutions that can help you consolidate your debt and even get you lower payments. The link will be in the description or comment section below.
Okay, so this guy offers two solutions if you have a high credit card utilization. First one is debt consolidation, and the second one is balance transfer credit cards. I want to talk about both of them, but I want to start with debt consolidation companies. The idea of debt consolidation sounds very good, but in practice, there are few critical issues that you have to take in consideration. First, debt consolidation company do not take the health of your credit report in account. They don't care, they just deal with the debt. What happens is that they tell you to stop make payments to those credit card accounts while they negotiate the balances down. That is mandatory for the process. You cannot get in a settlement agreement with any credit card if you are not in default. So they require you to become default with that credit card company, hurt your credit report, and only after that they can try and get a good settlement agreement. And that is the second problem. They will not get you the best settlement agreement possible. If you owe $20,000 on credit cards, debt consolidation company have to make sure that they save you money, but they also make money for themselves. So they can promise you to save $5,000 off of your overall balance, but in reality, they actually cut $10,000, and $5,000 is what they take for themselves. Now, don't get me wrong, they have to get paid for the work that they do, but it is always better for you to be fully involved in the process and know exactly what you're paying to the credit card companies and what you're paying the debt consolidation company that is actually working for you. Now, let's go back to the credit report. Throughout that entire time, before they get a settlement agreement and actually starts making payment on it, and until the last payment is made, that credit card account is dramatically hurting your credit report and your credit score. It is basically paralyzing that tool and you cannot use your credit report for anything. Now, sometimes you have to let things get worse before they get better, but the problem with debt consolidation companies is that the process with them is being dragged to a full year, 2 years, and sometimes even 3 or 4 years. So what do? You want to make sure whoever is doing settlements for you understands that they have to take in consideration the health of your credit report and that the entire process is completely transparent. The second thing mentioned on the video is balance transfer credit cards. That is probably one of the best tools that the credit cards world give you to make sure you save money on interest. But the problem is, how are you going to get a good credit card that offers you balance transfer when your credit score is so low due to your credit card utilization? Make sure to check our latest video that explains to you exactly how to make payments on your credit card account in the most educated and calculated way that is definitely going to benefit your credit report and increase your credit score. So do me a favor, make sure that you don't count on useless credit hacks that you find online. For more great advices regarding your credit, make sure to subscribe to our channel and follow us on our social media down below.